So when I was first getting started in stock market investing, I had a question that came up in my mind quite frequently when stocks lost money and when the news said that so much million, trillion, billion dollars of value has been wiped out of the stock market. My thought was, how is that possible? Everything that is behind the stock market is still the same. Like all these Albertsons stores are still there. Well, Albertsons isn't listed yet. That's another story. That Albertsons is about to IPO. Walmarts are still there. Still have Raytheon pumping out munitions and so forth. But yeah, why would the stock market lose value? And to answer that question, you have to simplify things. Let's assume that the stock market is made up of one stock from one company, okay? And let's just say this company does. Let's just say it's a restaurant, okay? So if let's say my stock is trading at $30 per share. And because of the amount of shares I have issued, that makes my market capitalization like $100 million. If news comes out that people can't go to restaurants because of a disease, then the expected earnings of my company go down. And what happens then is the price that people are willing to pay to have shares of my company would be lower. And people that have shares of my company would believe that they're overvalued and sell them. So the price drops. Nothing about my restaurant changes, and if the news reverses, the price will go right back up. But that value in the stock market has been lost. And it isn't necessarily the case where the price changes cent by cent. The reason why a price is the price it is because people have limit orders in to buy at certain prices, and that creates I would like to call them little walls, seawalls or whatever, to keep the price relatively stable. That's why in practice prices do change cent by cent, because of there's just so many wide varieties of limit orders. But if that news came out and there was only one share outstanding and nobody had a limit order in, then that share price could literally drop from $30 per share to $5 per share without going through any middleman price. And that would be the person who has the shares. If they think it's only worth $5, they can put a limit sell order for $5 per share because nobody's picking up their order. And if the person who wants to buy it, the most they're willing to pay for it is $5, then it suddenly drops from $30 to $5. And then, the news media would say that the stock market has lost, basically more than half of its value. And that's how that works. And value is lost in the stock market, but that doesn't mean it can't come back. So what's really important in my mind is underlying companies and what their future expected earnings are. And then you add in the dividends there. And if the dividends pay more than the interest rates, that also adds value to stocks in what they're worth. Yeah, that took me a little bit to understand in terms of value being lost. But it's really just the prices that people are willing to pay for these things. It's not linear necessarily. The prices of things, they can jump up and down. And if the whole stock market goes down because everybody's putting a limit sell order lower than the current stock price, then because most people who have their retirement in 401ks, their 401ks usually have a variety of stocks in their funds. You could lose value in 401k just because people are not willing to buy it for as high of a price anymore. Let me know in the comments if this is confusing to you, but if you want to make it even simpler, you could think about it like this. I have one apple, okay? And apples are rare. I think it's worth like $5. I wouldn't sell it for less than $5. I'd just keep it. Um, and let's just say that there's like a million oranges that flood the market, or a million pears. And I'm willing to switch over to eating pears because they're so cheap. Um, the price of that apple is not gonna, I'm gonna sell it for less than $5 now because I have so many like 1 cent pears that I can eat. Um, and so I immediately will sell it for $1 instead of $5. And there's no middleman, there's no in between. I still have the same thing, but I'm willing to sell it for it less. People are only willing to buy for it for about $1. So you could say that my value of what I have in my hand has decreased from $5 to $1. The long-term Warren Buffett style investor will probably do something smart, I guess, and he'd probably just buy all the pears and go to a pear scarce region and sell those. But I hope this sort of makes sense to you guys on what is the meaning of the price of a stock. And it's not super fancy. Yes, there's algorithms that get involved and auto buy, auto sell at certain limits, and those won't show up if you're looking, because those aren't real limit orders. They're actually they're auto trading robots that will basically put in a limit order at the price that it goes down to it. So I guess when you're looking at, if you have like one of the professional trading platforms, you will see the bid and ask for all the different price ranges. Right now, when you look at Yahoo Finance or whatever, you only see the top bid and the lowest asking price. That's all you see. You don't see what the volume of bid and ask is at different price intervals. But if you're using a more advanced stock trading platform like Street Smart Edge, then you will see that, and you'll know exactly how hard it would be for a stock to go below or above a certain point. Hope you like this video. It's just one of my morning tidbits for you, and have a great day.